Let's be real. No one starts an e-commerce business because they love bookkeeping. But here's the harsh truth. If you're ignoring your numbers, your business will not survive. You're making sales, but are you actually making money? Are you ever prepared for tax season, or do you just scramble at the last minute? Do you really know if your business is growing, or are you just surviving? Too many e-commerce businesses and sellers rely on gut feelings instead of hard data. And that's how businesses fail. In this video, I'm breaking down e-commerce accounting basics in plain English so you can manage your finances without stress and finally get clarity on your numbers. Hello, my name is Shakira and I'm the founder of Tapped Insider, and we provide accounting and CFO services for e-commerce and digital entrepreneurs. All right, so let's get started. So here's why e-commerce accounting is way more complicated than a regular store. First thing is delayed payouts. Unlike brick and mortar stores that get instant cash or use a payment processor, e-commerce sellers wait days or weeks for payouts from platforms like Amazon and Shopify. So that could be tricky when it comes to the accounting. The second thing is the sales tax complexity. Now, instead of just local sales tax, if you had a regular brick and mortar store, e-commerce businesses must track multiple tax rates across states and even countries. So unlike physical stores, e-commerce sellers deal with shipping costs, warehousing, storage fees, and supplier invoices from often different countries and multiple currencies. That's why e-commerce accounting can be a little tricky. Let's dig into e-commerce bookkeeping essentials. So your payment processor says you made $10,000 last month, but after fees, refunds, and taxes, your bank balance tells you a different story. So how do you actually track your real profits? Step one, you have to pull your sales data from your payment processor and e-commerce platforms like Shopify, Amazon, Etsy, PayPal, Stripe. This includes your gross sales, refund fees, and pending payouts before the final deposit hits your bank. All right. Now, step two is you need to understand and categorize transactions correctly. Revenue is the total sales before any deductions. That's the money you collected from the customer, okay? Refunds and chargebacks, of course, money returned to customers. Processing fees, that's the cut taken by Stripe, PayPal, or whoever your payment processor is, okay? Sales tax collected is funds you owe to the government. So if you're charging somebody something for $100 and the tax on that, which is 10%, that money doesn't belong to you. That $10 needs to go to the government. Cost of goods sold, the actual cost of producing or buying your products. Merchant fees also are very important. That is the cost of doing business on a platform like Amazon or Etsy or things like that. All right. Okay, so step three is to reconcile sales with your bank account. Let's say you sell a hoodie for $100 on Shopify. Remember step one, which is to pull sales data. You have to do that. Shopify reports $100 of gross sales, which is basically your revenue, the amount collected from your customer. Then we apply step two, which is categorize the transactions. After fees and refunds, Shopify deducts a 2.9% plus 30 cents processing fee. So that is $3.20 on that $100 sale for Shopify. A customer requested a refund on one of the items they bought for $20, right? So a customer refund of $20 is processed. Then Shopify collected $5 in sales tax on behalf of the customer, right? Now, step three is to reconcile with your bank account. Shopify would only deposit $71.80 into your account. If you only record $71.80 deposit as income, you're ignoring fees and sales tax, which means you're missing a huge chunk of your financial picture. And this leads to inaccurate books and tax miscalculations. Every transaction needs to be broken down to the correct bucket and then reconciled back to the bank. Hi, did I ever even tell you we have a free school community for tax and accounting proficiency just for e-commerce and digital entrepreneurs just like you? Yes, we do. It really is very difficult for you to be trying to focus on taxes and accounting when you're growing your business. But when you're in a community of people who are going through the same struggles with you, and you also have experts like me who are guiding you through those difficult phases, and when you get stuck and have questions on what to do or how to go about it, it really is very helpful for your business. See the link below, and I look forward to seeing you there. Let's get back to the video. Okay. So step 4 is generating accurate financial reports. Think of reports like your health checkup for your business. The 3 reports you need to run every month or every 2 weeks, depending on the size of your business, really is the profit and loss statement, the balance sheet, and the cash flow report. The profit and loss statement shows how much you actually made after costs, okay? The balance sheet, on the other hand, tracks assets, which is what you own, like the inventory, and liabilities, which is what you owe. And then your equity, which is your stake in the business. What portion of the business belongs to you, okay? So cash flow reporting is another very important report. It tells you if you have enough cash to keep the business running. Do not use your bank balance as your financial health check. Your bank balance does not give you the full picture to consider what you owe and what you own, okay? So it doesn't tell you if you have outstanding vendor or supplier bills, payroll, or sales tax liabilities. It doesn't consider everything else that you have going on. So stop using your bank balance as your financial checkup, okay? All right, so you need a full picture so you don't make financial decisions blindly. All right, step 5 is analyzing your numbers for better decisions. Let's say your revenue is growing, but you still have no money left at the end of the month. What's happening? Your profit margins might be too low due to rising product costs, high return rates, expensive ad spend. If you look at your numbers, you'll be able to pinpoint exactly where that issue is. When you analyze your numbers, you can make data-driven decisions, like adjusting prices or cutting ad spend costs or changing suppliers to a more affordable one without compromising quality, or even investing in better performing products. With data, you see clearly. Honestly, you do. Now, if you're manually entering transactions in QuickBooks or you're using spreadsheets, stop. We are in 2025 and you are not in the business of crunching numbers. You are in the business of making sales. That is your number one focus. Now, you can use automation tools to sync Shopify, Amazon, Etsy into an accounting software correctly and it'll categorize it, okay? So let's take Shopify accounting process as an example to show you why automation is very important for your data accuracy. So the first method is a quick and dirty method. This is when you're just tracking your bank deposits, like we have said not to do. It is fast but dangerously misleading, and you're not audit ready. God forbid the IRS comes and knocks on your door or sends you a letter and asks you to provide this detail. You're not audit ready if you're using a quick and dirty because you're using just the bank. Where's the detail? It's going to be on you to provide the detail, okay? All right, so quick and dirty, not the best. I don't recommend it. I've said it before. The sales snapshot method is basically when you're using your statements from Shopify, Amazon, the bank payment processor to track your revenue, fees, and refunds separately. But you will find that you sometimes have to rely on estimating because there are some pending transactions, pending settlements. You will get more accurate profit margins if you use this method because, of course, you have support to back it. However, this does not give you a full detailed reconciliation, and it will require using journal entries. So if you don't have an accounting background or knowledge, an accountant could create the template for you the first time to set it up, but there's a lot of room for error if you're not an accountant in using this method. All right, so the third method is the audit ready method. This is when you use automations for detailed reconciliations. It does require a technical mapping, which is typically done during the setup, but this method helps you clearly answer crucial questions. It tells you clearly which products is actually making money, which ones are not. It gives you the detail, and God forbid an audit comes, you're ready. That's why I like this method, right? Automation is key. Now, businesses are at different phases of growth and size. You may choose a method that best suits you right now because this is what works and you don't want to rock the boat. However, I want to point out that the dollar impact of using the first method or the third method is very different. You need to see the difference in both. So let's take a $200,000 a year business that is using the quick and dirty method, which may cause between 10 to 15% misstatements, right? Now, a 10 10 to 15% misstatement for $200,000 business, that's around 10 to 15,000, right? However, a business making $1 million annually that is still using the quick and dirty method, that is an easy $100 to $150,000 misstatement. That is a potential tax headache. It's a disaster. I need you to understand that there's a dollar impact for you choosing to do things the way you continue to do it if you know that it's not working out the best for you and it could bite you later. So I strongly advise investing in automation tools. Here are two main ones that I recommend. There's A2X, which syncs Shopify, Amazon, Etsy, and all the other different platforms directly into your accounting software without errors. A2X is top notch. It's really good. And then there's Link My Books. It's a cheaper alternative. It's powerful also, and it's really good for automating. Now, if you're worried about the initial setup, my team can help you with that. It is crucial to emphasize that setting up your books properly from the beginning saves you thousands of dollars later. Believe me when I say, if you don't take control of your numbers, will take control of your business for you. So it'll take control and you'll see that things are not working out. It is very important that you start tracking your revenue correctly, that you automate everything and categorize expenses the best way possible, and that you work with an e-commerce accountant if you don't have one already. It's very important that you use data to drive decisions. Like this video if you found it useful, and subscribe for more e-commerce finance tips, and check the links below for the automation tools that I discussed. Thank you. Let us know if you have any type of video that you want us to create, okay?